introduce our guest for today. So today we have Arvind Kothari with us, founder and director Niveshaay. By education, he's a CFA from US, CA, CWA, and he did his graduation BCom. And he has over 15 plus years of rich experience in equity research, and that is more scuttle based investing, we can say. And he started his career as an industry research analyst with ICCI Group. He worked for over 2 years and then he realized and decided to set up his own team. So Niveshaay has been operational from last 10 plus years, and they firmly believe that taking entrepreneur calls works better than questioning quarterly performance, and there is much more to look beyond numbers. So this we would be knowing from Arvind directly. So a very warm welcome, Arvind. Would appreciate if you briefly tell our attendees how it all started for you, and how did the conception of Niveshaay came in place, and what is the thought process at Niveshaay, how you guys go about investing in markets. Yeah, over to you, Arvind.
Hello. Yeah, thank you so much for the great introduction. And I just, apologize for, the technical snag, whatever happened. I don't know how it happened. But the point is that, are you guys able to hear me now?
Yes, loud and clear, Arvind.
Perfect. So, so it all started, way back when I was in my 11th standard, when I just because of one of my friend who was interested in trading, and I also started to, just trade with him, and he actually, had one of his relative, in fact, a first cousin of his, who was into the fund management industry, and we got introduced to that industry pretty early. And while doing my chartered accountantship, the mentorship that I got from, one of my, mentor was Mr. Jay Chaira, that how corporates, make these huge profits and how they grow was something which, in fact, was always in the back of my mind because I always wanted to be a successful entrepreneur. But then, because of the lack of funds, I thought that markets are something that I should, maybe start looking at. So that's how the journey started. I mean, I joined ICICI as a industry research analyst, and after working 2 years, I figured out that this large level research, my voice would never be heard. So let me start something on my own, and I came back to Surat and started Niveshaay with a couple of people, and there was a simple, you can say, mindset behind that, that if we could do investing for a few of the family and friends and grow the capital. It was not in mind that we'll open some wealth management fund or firm, or eventually become a large entity or something like that. It was just that because we wanted to have some starting point of in businesses, because I always wanted to be in business, so I was very excited to meet good businessmen. And that is how I thought that if I start small also, this gives me an opportunity. Even if I small holding, I can meet at AGMs to great entrepreneurs. And during my stint at ICICI, I had actually met some industry leaders, and that again excited me a lot. So yeah, Nivesh, I started with this whole mindset that how can we create a company where we can maybe start our entrepreneurship journey. Eventually, we focus a lot on fund management, and now we have a good base. But yes, starting was very small in terms of just trying to figure out how we can maybe stay in touch with these good entrepreneurs, and if I can maybe somehow partnership with some entrepreneur and become a shareholder, or maybe start some venture of my own. That was the whole idea, because my great grandfather was a phenomenal entrepreneur. In fact, he was a cotton king of his time, and he in fact every morning in Rajasthan, I belong to a place called Jaisalmer. He used to in fact open the cotton prices for that day. And near our house, in fact, there were almost 200 people used to gather every morning, these cotton traders who wanted to know from him that what his sense is and what he feels where a cotton price would trade today. And he used to set the prices. That was his power. And over over the years, whenever used to go to my native place, a lot of those people near our house used to tell me these heroic stories of how he used to pick up businesses which were almost जैसे हमारे मारवाड़ी में बोलते हैं कि मिट्टी में भी हाथ डाल के सोना बना देते थे. तो मेरे को ऐसा लगा कि ऐसा क्या करते थे वो, पता नहीं. तो I also was very much interested to understand what he actually did. And people used to say that he had accumulated wealth, that our seven generations would not be having any issue, and it couldn't last even two generations. So I was very intrigued that how the downfall happened in our family, and how the wealth that got created got lost. And I just figured out that maybe equity markets is something where long-term wealth could have been created if my grandfather thought of maybe putting up a listed entity or organizing his assets, or maybe even because the Birla family then was close to them, so even putting some money, and they actually had interacted a lot of times to put some money in their businesses. If some businesses they would have put money and got shares, then the story would have been far different, right? So that was a starting point, that I wanted to come to markets. I wanted to maybe understand how businesses work, and how wealth creation over the years could be achieved, because of the background that I even had in my family. And you know as I told, that my grandfather and my father and all their cousins, whatever businesses they started, they could never match to the scale of business that my great grandfather had. In fact, lost capital, and then became averse to risk, and then completely lost the risk appetite. Right. So this is the journey of a lot of investors also, right? That they start out to be risk takers, and then they maybe make certain maybe mistakes, and then completely become risk averse. So that is how I thought that behaviorally, maybe how I can solve this puzzle, or how I can maybe take that legacy forward, was was always running in my mind. And because I didn't have capital, so yeah, markets were something that I thought that I could make maybe some money, and then maybe start out entrepreneurship. So that was my start.
That's great. So Arvind, like I have heard you talk about there is things beyond numbers, right? You always try to focus on
Yeah,
the business, and you look for the businesses which are less prone to disruption, and you always talk about the entrepreneurs who are running the zeal and zest of the entrepreneurs is one thing you
correct.
always look for. So when if I were to ask, like, how did you first became interested in scuttlebutt investing? Is it the nature of job when you started at ICCI group, or is it like you developed it after you formed Niveshaay?
It was a lot of things combined. I would say that even before I started, my job, we used to actually, when we used to do our own investing. In fact, it was not investing; it was just a small time pass that me and my friend used to do in markets. But because we were in Surat, and Gujarat being a hub of a lot of good industries, what happened is that we got introduced to some groups like Aarti Industries, or some of these, textile companies which were nearby to our area. And because of the connection that I told, that the cousin of my friend was into fund management, we got a chance early on to meet some of these companies, or even just go to an AGM just for time pass. I mean, nothing serious, but at a very early age we try to figure out that yeah, because of and I'll name him. In fact, he's Mr. Madhu Sarda of Valum Capital. Very few people know him. People know Mr. Manish Bhandari maybe, but the part two, maybe Valum Capital had two partners, and one was Madhu Sarda. And he used to, initially also tell us that, if you want to come into this market, either, take the extreme side of just, doing SIP and things like that, or then come to the extreme side of knowing the entrepreneur and participating in his journey. There is no midway. You cannot be, managing the capital in terms of, some risk allocations, or maybe making these maybe small bets and things like that, because then you'll be maybe be successful in life, but then not enjoy the whole process. So we somehow decided that let's be on the extreme, where we maybe get to know these entrepreneurs, and maybe participate in a long term journey. So it was more of an exercise that started because we didn't know anything in the markets, right? I had no experience. None of my family was in this business. I had no experience in the markets. And because of being in Gujarat, where it's, and most of my relatives being entrepreneurs, their connections with some entrepreneurs, and also the preachings that we got from Mr. Madhu that it is much more important to know the business, and to visit and to attend the AGM, and try to attend the distributors, try to know from the market what the product you are basically picking up as a stock, and what is the journey of the entrepreneur. That was a very early, you can say, maybe a handicap that we had, because we didn't have very large research team, or we didn't have very good mental models to go about research. We thought what was available was, maybe visit these factories, visit these AGMs which were nearby, talk to some entrepreneurs which are, close to us. So it emanated more from being handicapped in terms of not having any experience. And the only thing that I understood, that by talking to people, at least I'll get some idea. At least I'll get some idea of what the business is, how it is progressing. And that, in a way, was the starting point. I never read any book on investing. I mean, no Philip Fisher, no One Up on Wall Street, but it was a natural progression that scuttlebutt came to us. And then actually I read the book, and in a way it fortified my belief that you should do scuttlebutt, which got, in a way, ingrained in the organization, because the culture was set right from the beginning. Were first three of us who believed in that.
That's great to hear, Arvind. So, Arvind, scuttlebutt comes at a later stage. But if I were to ask you about the idea generation, so how you generate ideas, and
Correct.
what is the homework at your end which you do prior to going for scuttlebutt, and also like the reliability of information which has been provided by the management is like it could be right or it could be flashy in the sense they want you to invest kind of. So how
Correct.
you made make the segregation in such cases?
So it has been a very difficult journey. I'd say it has been. We were prone to a lot of errors, and some errors showed up 2 3 years after what we were making the error, right? So it's not that we had figured it out right from the word go. What we used to do earlier was, just because, as I told, we were very much prone to availability bias, right? Because we had this circle, and this circle knew some entrepreneurs, and those entrepreneurs were our go-to, you can say, information for doing our research, right? So, and in those times, actually, there were no screeners, or there were no lot of research material available, and we were never interested in large caps, right? We were never interested in putting our money in large companies, or companies for which there were research reports which were easily available with a lot of brokers. So we knew a lot of good friends who had their maybe uncles or anyone in brokerage industry, so we could get access to those reports. But our mindset was always, to find some company where we can maybe get some information because of someone we know who knows the promoter or the family of the promoter, right? So though it was a very bad way to start, because you only look at what your universe is, and the universe of the market is very big, right? So it started with a lot of things that we were just trying, and maybe some clicked and some didn't click. But the point was that it helped us initially, because our universe was small. We went in very deep because we had some 10 12 connections, right? So we probably knew an Aarti Industries, or maybe some Lakshmi Machine Works, or some companies which we had connections with. And those companies luckily were into products which they wanted to scale. And we, at an early stage, tasted the success in terms of when a company grows fast, how the wealth creation happens, right? So even if out of 10 only 3 or 4 worked, but those that worked gave huge returns, right? So the starting point was, in a way, a limited universe. And over the years, what we did is we added a lot of, you can say, things that how to start with, right? So for example, when I joined industry research, that gave a lot of starting points in terms of industry data, that trackers we used to keep, and power consumption in India. What is the power cost in various states? For example, for example, if I'm looking at textiles, then what is the cotton, you can say, price that is hovering? What are the spreads over there? We used to track even in media and entertainment as in segment. For example, what are the ARPUs that a Z or these people are making, or maybe telecom. So when I joined industry research, I got exposed to a lot of industry parameters, right? So a lot of macro used to happen, but I didn't enjoy that job much, because how to relate it to micro investing, I used to always think. But what happened 6 months before joining my job is, that my boss, Mr. Deepak Kenkare, he was a fantastic gentleman, and he could figure out that I love meeting people, or I love meeting management. What he used to do is, and being a very, very kind guy, all the invitations that he got from any industry event, of any you can say a product launch of any company, because he was in the industry for very long. He knew most of the corporates in and around Maharashtra, and most of them knew him. So he used to get a lot of invites, and I used to be his go-to person to send those invites, because he had tried with his other employees, but no one was interested to go, right? And he himself, because of his age, had lost much interest to visit these. So it was very lucky for me in that way, that after getting that that macro picture, I got to deal with a lot of you can say these events where I met a lot of entrepreneurs, made connections with a lot of industry people, and that in a way gave me a starting point of how I can increase my base of the companies or sectors that I track. And then when I came back, at Surat and started Niveshaay, what we used to do is that all these people whom were in my industry research team, I used to take some database from them in terms of what the broad numbers, and used to micro try to, for example, in those times, one database that we were looking at, the power cost, right? And power cost in few states had gone down, and with respect to some of the states, for overcapacity of power. And that we just thinking that if that is this, then how can we connect it to the micro? And we just ran a simple analysis, that which are the companies where power cost is very high, right? So we figured out that these are these tile manufacturers, glass manufacturers, where the power cost is very a high proportion of their cost of production, right? So that time, looking at a Kajaria in terms of if the power cost is going down, so it was a starting point was very bad. I would say that maybe these are brands which could have Kajaria, because of his brand itself, could have done wonderfully well, right? But the screener started like that let us to start with the industry point and try to do an analysis of which are the companies where the power cost going down can help them a lot, bring them a competitive advantage in that state. And that is how we broad based our research in terms of looking at various data points from the macro angle, and then trying to link it to the micros. And then 2014, 15, 16, in fact, we used to attend all AGMs which were in Gujarat, or try to visit any, for example, Finolex cables were listed, but RR Kabel, for example, I knew the promoter's son. He was a friend of mine. So I used to maybe visit whenever he was in Surat visiting his distributor. With him, I used to visit his distributor and talk a lot in terms of what is happening to the market. So over the years, what happened is that I tried to figure out a lot of entrepreneurs whom I need to get in touch with, to get into details of the industry, who either were the industry leader, or maybe a significant supplier to the industry leader, or maybe someone who's very closely associated in the industry, or a consultant, or things like that, right? So we have this pool of 40 to 50 people now, who are our go-to encyclopedias on those industries. And that is where you can say our starting points generally are. We don't keep finances. So generally our belief in at Nivesha is that if the financial numbers have started to perform, that is not where I want to start entering in a company, because the run up in the stock might have already happened, right? I'm not saying that stocks don't go up even beyond that. Maybe it's a handicap. We off late also have made a lot of models where both financials, this scuttlebutt that we do, and a lot of things we try to combine. But the point is that we are very much value conscious, right? So if I'm able to catch hold of a sector and a company whose finances are going to improve in 3 to 4 quarters or 5 quarters from now, that is a sweetest spot that we have at Niveshaay. For companies where the financials have already improved, or the numbers have already come, we generally are not that much interested. I mean, we do allocate if we need to, because still the story is intact. But our best you can say allocation sweet spots are companies where we find that some improvement, the market doesn't have much information about, or even if that has information, it is under research, and maybe it will take some time, and hence most of the investors might not be looking at this company, is what our main you can say allocation, you can say, style is. So yes, these 40, 50 entrepreneurs, I'd say, are our starting points to whom we interact, and they generally give us a lot of feedback. And we are maybe these are into textiles, maybe these are into solar power manufacturing, maybe these are people who belong to the cable industry, maybe these are people who belong to the chemicals, all these industries. So in that, certain industries are not covered. For example, though I was with ICICI, we've made a strict rule that we don't, cover financials. So, almost 35% or 40% of the market we completely ignore. But that is that. I mean, we don't understand financials much. No one in our team has that capability. So we avoid a lot of things also, right? So that gives us you can say, a lot of free time to focus on the things that we know. So I'm not saying that finance is not my circle of competence, because I've worked in the industry. I know finance a lot, but somehow there's a handicap in my mind that financials are, at the end, maybe leveraged, commoditized bets which I don't want to take, and I only take them at the bottom of the cycle just to trade them off for, from the bad cycle to maybe a medium cycle. So I've never made great money in financials, but yes, I've played the cycle a couple of times because of some friends who understand financials well, and just maybe taking a punt of 10-15% of my portfolio. That's at max that we've gone into financials at any point of time.
Right, right. So, Arvind, like you talked about it. So basically, identifying the consumption pattern. Say you in one of your interaction, you gave example of identifying the success of Enfield and the consumption of Maggie. Such kind of small things are easily, like in hindsight, we are able to gauge that less these could have been identified at first place. But catching something nascent, and when it is not what we say not known to the broader market, so that is a herculean task in itself. So what is the differentiator? Matlab, how exactly you go about finding such companies per se?
So yeah, it's a very difficult task, and it is something, that over the years we figured out that, every time we try to do that, we'll fail at 40-50% of the time. So maybe my success rate is poor when you compare to the other fund managers, that the number of bets that they take and the number of bets that are successful, mine would be less. But then I take that risk in terms of, the kind of returns that I make on the bets that are successful is far, far higher, because we try to, maybe enter a bit early, right? Now, how do we try to enter early? Is something which over the years, for example, I just give you a recent example that, there was a company called Borosil Renewables, which, one of my friend was in solar, manufacturing of you can say modules. And we used to visit him, and in 2017 when I visited him, he used to tell me that, the solar business is growing at this rate, you should look at, maybe funding me, things like that. And I used to make fun of him that, it's a commoditized business, and I'll not fund your company, things like that. But then, over year over year, he was increasing his capacity. And 2019, when I met him, he told me that, there's a company called Borosil Renewable, which is, making solar glass. And that company was not maybe that, you can say, great in terms of the capacity that it has, because a lot of it is imported into India. But they've recently increased their capacity. And you should look at it that they have improved their quality, because earlier breakage issues were there with the company. So we looked at it, but then because of the imports we were not very sure, we just gave it a pass. But post COVID, again when we met him, so these are almost 8 visits that we might have made in the plant of my friend, Mr. Vineet Mittal, who runs Navita Solar. On the eighth visit, he shared a very important thing with us, that the import prices of glass for the new contract that they're going to sign, the traders in China are saying that they'll maybe have 1.5 to 2x kind of prices. And I said, what happened, why these kind of prices? So he said that the glass demand had gone up substantially in China itself, because the Chinese government and world over a few of the other countries are ordering bifacial glass modules, which has glass on both the sides. And China in 2018 had come up with a policy where new glass capacities they had banned, and you could only put a new capacity if you close some other capacity. Now, this was an input which, if I had, if I look at the financials of Borosil Renewables, nothing had happened for 10 years, right? And if I'm a fund manager and I have fiduciary responsibility for the client that I have, I cannot tell them that, see here, see, look, here is a company where, nothing has happened for 10 years and the financials still look bad and nothing maybe will happen for the coming 2 quarters, but I want to buy. But we understood what was happening in China. We downloaded all the annual reports of the Chinese glass manufacturer, which is Genie Glass, Flat Glass, and looked at their financials, looked at what capacity they had and what capacity Borosil had and why it suffered over the years. And we figured out that this capacity in China cannot be ramped up easily, and the demand of solar glass is going through the roof, and hence the imports. And because the container prices at that time was also surging, we thought that for a year at least the imports are not going to come. And the prices, if the landed cost of solar glass in India is going to go up 1.5x, then Borosil is also going to charge 1.5x. But then the contracts would take time to get reflected, right? To negotiate, renegotiate, and for that to happen. And for a commodity like raw materials which Borosil Renewables was using, maybe soda ash or silica, those prices have not gone up, right? So if you look at the sales of 100 goes to 150, and sales of 100, maybe they were having just 5% margins. For example, the net profit was just 5%, which was 5 crores. On a base of 150, the cost still remains 95, so the profit goes to 55, right? Almost 11x, right? So the profit goes so high, and that was what we were very much excited with. And maybe we preempted that, but the point was that we could convince our clients. And over the years, the only thing that has helped us, that we've convinced our clients that we will keep on making these bets, which we can get proven wrong if they don't work out, because we are taking it earlier than the market, we are taking it earlier than anyone in the industry, maybe because people in the industry are wanting the financial numbers to come, they want the execution to happen, they want a lot of things to happen. So on the risk of going wrong and taking confidence of all our investors, we tell them that you put only the money that is in the highest risk bracket to us. You don't give us the money that you've kept it for your retirement or your you can say your child education or things like that, because that is not something, if it is happening in few years down the line, then in 2 3 years maybe our kind of portfolio is very risky. But if you have 5 7 years kind of a time horizon, we will be taking these bets which would be risky and which we will be starting out early. So it takes a lot of, you can say, courage to convince your clients, also to gather a lot of data. And whenever we find such a thing, yeah, the whole firm, so it is like the whole team of Niveshaay wants to start that business, right? It is that kind of an atmosphere at our office, and we find a trend that we believe it's emerging early. Our heart, soul, and everything we throw at it, it's like we all want to start that business ourselves, is the kind of, you can say, energy that every team member has at that point. And in fact, over the years we've done that with entrepreneurs, we've sat them when they were expanding. And these are listed companies, unlisted companies, and we used to, most of the times with the unlisted companies, they also gave us liberty to, and sometimes they regarded us as good well wishers of them, because we used to give them a lot of ideas what is happening in the industry, a lot of data we used to take from them, we used to give to them. So if they are expanding, for example, I've sat in a lot of companies meetings where they are finalizing their capex equipments, right? That whether to take a German plant or to take a Chinese line, what kind of capex it would happen. I've traveled with a lot of entrepreneurs in finalizing their capital equipment from maybe China they were ordering, or Italy, or these kind of countries. In fact, for one of our client, I was there for 12 days in China, right? And visited three complexes of these capital goods, and got a lot of idea of how the Chinese scale happens, and how the Indian capex that this guy was planning, how he's planning to do, and what scale he can reach, and what exactly goes into reducing the capital cost when you get it a line ordered from China, and what is the differentiator if you order from a Germany or a Italy. And we've done due diligence for a lot of these entrepreneurs to make tie-ups with these Chinese companies or Italian firms and things like that. So yeah, the focus has always been of an entrepreneur, right? So like an entrepreneur, we get excited when we look at a theme, and we approach it like an entrepreneur, that whether I will be comfortable running this business or not. And that is where if you look at an entrepreneur, has two great skills, right? A, he takes risk, sometimes maybe far higher risk than maybe the other people in the society are taking. B, he's ahead of his times, right? He's ahead of his competitors, right? So I tell to my investors also, if you're running a business, and if you love these two things in your own business, then as a fund manager you tell me to take lesser risk, and make a diversified portfolio where the chances of risk and error are less. Then tell me how you can be earning returns which are higher from the market, or you can earn returns which are higher than the normal mutual funds, or maybe the indexes maybe giving, right? So that is where we've always made, you can say, the whole structure around that we are not a fund management company. We are a bunch of entrepreneurs who maybe have a dream of becoming or starting our own industry, and hence we keep on finding these industries that we want to start. We keep on finding these projects that as an entrepreneur I'd want to put. And because I don't have capital to start that or the energy to run the whole enterprise, it is good that markets most of the time provides me with those great entrepreneurs whom I can maybe buy a small stake with them, and along with my other entrepreneur friends, we can maybe participate in some fundraising that those have. For example, from 2017 we've done this exercise, and which has helped us a lot, that we've started offering these mid-market companies or smaller companies, entrepreneurs, that if they want to raise capital, we can raise capital for them, equity capital for them, not debt but equity capital for them if they want, because that is which gives it's even better, you can say, skin in the game, where we are putting our money actually in line with the project also, right? So that's how over the years I'd say that, because of that bent of of an entrepreneur, or the and I'm not saying that doesn't come with a higher risk. We definitely take a higher risk. We've been able to identify certain trends. I'll not say a lot, but certain trends which we've been right on. And when we've been right, it has been very rewarding. When we've been wrong, it has been very problematic also. But yes, the approach is going to remain the same. We're not going to mellow down our you can say approach, even though people might say that as a fund management company you should be taking lesser risk, or you should be managing the portfolio with this risk mindset in perspective. Yes, that is what the approach has been and will be.
Right. So, Arvind, like if something you have been invested in, and obviously from your talks, I can gauge you believe in concentrated investing. So, how
Hmm.
much time? So you believe in entering early, right? So there
Yeah.
comes an opportunity cost, and on the top of that, there could be a possibility at a few quarters down the line, the tailwinds might convert into headwinds, and there are some macro
Yeah.
challenges also happening. So in such cases, how much time do you give to that investment, or you prefer booking losses in such cases? How you go about dealing such situations?
Yeah, so that's a fantastic question. And, in fact, over the years, we've corrected a lot of mistakes in that approach, because earlier it used to happen that, we used to give a lot of time to our investments. And sometimes, as you very rightly said, that there are headwinds that have, maybe, come in the sector. And because us being very close to the entrepreneur, so we were behaviorally challenged to make an anti position, right? I mean, to sell out and maybe, reduce my opportunity cost. But over the years, we've realized that, that is never healthy in terms of our relationship with that entrepreneur also, and also from the point of view of the opportunity cost, right? So what we've done over the years is that, yes, if and we've tried to size our position also. So for example, we used to maybe take a very high position early itself, maybe even if the story is going to play out in 3 to 4 quarters, maybe my starting allocation used to be 7 8 10%. Then we reduced it to 2.5% actually, so that we can scale it up as and when things go in the right direction, right? So yes, over the years we've learned few lessons from the fingers that we've burnt at a lot of places. So now we go a bit nimble footed and then try to scale it up. And second, also, when we don't get what we want, we book out and we move out, right? So for example, there was in fact last year a chemical company, and a lot of people in the public domain would know also, because we've talked about it also in the past, which it was into the food color space. And because of its capex that maybe got delayed, and the market for you can say their intermediaries completely went for a toss. We thought that we made a mistake and we used had to book a loss, and we maybe 30-35% whatever we booked it and got out whatever price we got from the market, because it was an illiquid stock. We were selling our way down, but then it was something which we utilized that for something which we were very comfortable maybe holding at that point of time, which we are already invested and was showing promise. So yeah, over the years we have made certain hacks which in a way has made us a bit better. But yes, we're still prone to those mistakes, and we'll keep on making that, because we inherently believe that if you don't try and just keep sit on the sidelines, you will never get the right cost of entering in a company, right? So I can keep on sitting on the sidelines and just observe that जब भी capacity आएगा तभी मैं invest करूंगा, या जब भी numbers आएंगे तभी मैं invest करूंगा, या let me wait for a quarter or two for the plant stabilization to happen, for new types to happen, things to happen. I can do that, right? I can, but I think then I'll not get a proper valuation, because what happens is that these days the markets are very discovered, right? So if I could say that if that strategy would have worked in 2012-13, I don't think that works in 2023, because there are a lot of smart investors out there, and they have in a way figured out that if something has a good capex and it's coming on stream, or the numbers 2 quarters of earnings have come and now the scale up is happening, they will enter, and most of them would enter at a good result, or maybe a whiff of any announcement of a good you can, and people can track export data these days monthly, a lot of things, right? So I'm not sure whether I'll get a good entry point if I wait too long, right? So we still have that approach that we want to start putting our even small capital, but yes, early, but yes, we do a get out these days if it doesn't work out, and size our position in a better way than we used to do earlier.
Right, Arvind. And for our attendees, like if you guys have any question now, you can send in a speaker request. I'll approve and you can take your question to Arvind. Yeah, Kaushik, you can unmute and ask your question.
Thanks, friends. Hi, Arvind.
Hi,
Have
Kaushik.
a nice day. Hi. Arvind, I just like in your while you were speaking, I just understand that you're very close to the management of the company.
Hmm.
Doesn't it count as an you have the first-hand information before someone has that information onto? Because is it ethical or is it like come under corporate governance?
No, so in fact, over the years, because of interacting with a lot of these entrepreneurs, and as I told, these are entrepreneurs which are in both public and private markets. And what one thing that I figured out that any entrepreneur who shares any information to me which is not there in public domain, in fact, is a big no-no for me, because that doesn't speak very good about the ethics of the entrepreneur himself. So even though there are entrepreneurs, which I know their family because of some family connection, I've seen good entrepreneurs even, having that kind of a strong link, don't share any public, information which is not there in public domain. See, these are inferences that we have to make by interacting with a lot of entrepreneurs, and from, you can say, a lot of due diligence that we ourselves are doing, right? So, for example, if I know a lot of people in the industry, then I can maybe talk to a unlisted guy and take a feed, and most of the time what has happened is that an unlisted private guy has given us far better information and far better contributed in our, you can say, investment thesis, because he doesn't have any you can say points of you can say markets would think about him anything, or he doesn't have any reservations on any point, right? So most of the times these entrepreneurs would give us a feedback of the industry as and how it is happening, because the entrepreneur of a listed entity, no matter how bad the industry is or good industry parameters he's seeking, he'll always want to give a very judged opinion, right? He will not want to give a very bullish or a very bearish kind of an opinion, right? But other entrepreneurs who are in the private space, they don't have any public, you can say, they're not publicly answerable, so they will give, if the industry is very bad, they will be very honest on how bad the industry is, and if the industry is very good, they'll be very honest that they cannot keep up with the orders, and hence we take a, you can say, judgment from them. for example, a lot of companies over here, when their order books, we made a judgment of how the order book of the private entrepreneurs were doing, right? So these private listed companies were doing, private limited companies, sorry, were doing. So if there is a 10th guy whose order book is full and he cannot maybe fulfill his orders, if that is a scenario in an industry, then we make a judgment what the leader would be doing in that industry, right? So yeah, what you're saying, that do we try to engage with any promoter in terms of any private information which the public doesn't have? No, never. That is never our mindset. And in fact, if certain entrepreneur has out of his enthusiasm shared something, we in a way stay away, because we know that that is not a good entrepreneur who would do that, right? And hence that is something which we try to avoid eventually.
Follow-up question on this.
Mm-hmm.
When you are like talking to a promoter, as this business is way more than what we think. When we
Mm-hmm.
actually talk to an investor, they
Mm-hmm.
like companies as well as the top investors or something, someone who's holding like 0.5 to 1% or 5% of the business, and he's since having this company for like around 5 6 years. I think you also share the similar stories with you. Those people will be every time very bullish on the company, and it will be like the information whatever they give, it will be like it'll be satisfying to us. And investing
Mm-hmm.
is such a world that whatever we try to portray the data, we make sure that our data is the right set of data. We don't
Mm-hmm.
show the other part of the data. So how do you
Mm-hmm.
differentiate this as an investor or as an entrepreneur, or even you can take it as a fellow fund manager or someone? Like,
Mm-hmm.
how do you differentiate this part in investing?
Another very important question. So please understand that you need to make buckets of the businesses that you're picking, right? Whether it's a cyclical or a trending company, company which has a long trend, and company which has a high market share in whatever business that they are into. So I am very bullish on companies which are into niche space and who have a high market share. For example, a company that we initially had way back in 2013-14 was a company called Jamna Auto, right? And it had almost 35% market share in Lee Springs at that point of time also. So even though there was a lot of negative data points in terms of what the CV cycle could do and how the CV cycle was placed, we visited a lot of these, you can say, hubs. For example, in Delhi, if someone has visited, there are these hubs where there are a lot of these commercial vehicle assemblies that are happening, and a lot of these materials you can have the distributors of Jamna has a brand called J Springs, right? So we visited a lot of J Springs distributors, and when you talk to them, you sometimes get very different, you can say, picture from where the promoter is maybe saying, right? And that is where you try to doubt him, or you try to maybe question him. But the point is that if the guy has a high market share, and if he is putting up capacities, growing his business at a high rate, I always would give him a benefit of doubt. And if it in a way, because see, if in businesses where a company has a high market share and is growing capacity and is a leader, and the entrepreneur is very agile and efficient, and the integrity is proven beyond a doubt from whatever interactions we have, we want to take a leap of faith even if I'm wrong. So what I'm trying to tell you is that you say that certain entrepreneurs would not try to speak any bad thing about the company. I'd say it is always in the long term things work out for these kind of entrepreneurs. So even I take that you can say leap of faith, and I in a way play down a lot of these negative points that people would be talking, or industry would be talking, because that is where a large amount of my money has been made, and a lot of money of my fellow friends who are in investment has been made, or the gurus that I follow, a lot of their money has been made by actually being a lot of biased towards that entrepreneur, right? You would say that bias is not good, right? But there are two kind of biases, right? One is a bias which keeps you or gives you the energy to hold on to your investment for the long term, right? And if the business is such which eventually you feel that the entrepreneur would not ruin it, or the structure of the business is such, or the market share of the company is such that eventually the business would not get ruined, I guess having that kind of bias in that kind of a industry is very good. But having the same bias for a cyclical like steel or any company which in a way is in a commoditized space, which I have in fact made a mistake in the past, because when you have a bias, you have bias for both type of businesses, right? So over the years, what I've done is that I try to remove and look at what things have worked for me and what has not worked for me. So keeping a bias for the entrepreneur has worked some time, because that way I have not looked at the negatives, and hence my holding period has increased. But taking that same bias in a business which is commoditized, or in a business which is a flip that I had initially just taken to flip it, and then I got very much attached to the business, that has in fact reduced my returns, right? So over there I take the negatives very seriously, and I want to act as soon as I can. You can say I fear because of some data points or some feedback of the market which I am aware of. For example, last year, I bought a company. Again, I might have discussed that in public space, and please don't take these companies as a whatever we are discussing as a you can say investment, because SEBI's guidelines don't allow us to give a lot of public recommendations. But for example, Rushil Decor, we entered, and we had a mindset that the new plant is going to scale up, and the margin profile was very visible. The market cap was just 500-600 crores, and that was roughly around the capex that they had done, right? So around 450 crores. So the replacement cost of the asset was around 700-800 crores, and we thought that the way they will execute, if the whole capacity utilization achieves 70-80%, it is at least a 2,000 to 2,500 crores or 3,000 crores kind of market cap that we can maybe get. But the whole industry turned around when the imports started just 5-6 months ago, right? And the margins, we were afraid of that they can decline. And even though I had maybe a very small holding period on that, and it was a good allocation that we had made on that, we pressed the sell button there and there itself. I didn't wanted to take the large bet, because I had not bought Rushil thinking that it's a great you can say a brand which will keep on delivering great results over the decade. And because I know the leader in the space, in fact, Action Tessa, which I came to know through a friend, and that entrepreneur, the way they are running is a fantastic business, and the brand that they are creating. So if I get an opportunity in the private markets in an MDF space, I will, for maybe 7, 8, 10 years, can invest in their company and be completely biased for holding that company, because I know how the brand is getting created, right? But on Rushil, the day I get the data that these imports can maybe reduce their realization by 5, 7, 10%, I was not comfortable holding the stock, and I just pressed the sell button. Maybe I might have panicked, but then I want to panic in those kind of companies. I don't want to panic in companies where the entrepreneurs are great, where the brand is becoming fantastic, and the market leader is in a way over the years I think that is going to improve the business. That is what the approach I have.
So, Kaushik, I'll come to you again in a while. I have one, two questions meanwhile. So Arvind, you were talking about China. So China plus one and the PLI. So in the
Hmm.
lines of demand and supply macros, I mean, if we talk of long-term macros, doesn't matter much. But again, you cannot completely ignore macros as well, right? So current situation in the market, how you
Correct,
see
correct.
broadly what's happening in the market with China opening up and the US fiasco happening. So how you see market going from here, and what would be your approach? Would it be like lump sum investment, or you'll continue SIP kind of? Well, you will advise SIP obviously.
So again, a lot of these, macro headwinds that we speak about, or there's been, in fact, over the past 2 years, post the COVID, you can say lockdown has happened, and then there was an anti-China sentiment first, and then China kind of opened up, and now we're seeing that a lot of industries are facing margin pressures because China kind of might have come back. So there are a lot of these narratives, right, which people want to maybe write about or want to believe, and a lot of people go by that, and in fact make a lot of mistakes in their investing. And I'll just share a small example. For example, this year everyone is talking about that this whole China plus one has gone for a toss. Yes, India will not, in few industries only we could do that. Most of the industries will not be able to do that. Now China has reopened, so many industries would not be able to come back, right? That is the whole narrative that people are in a way saying, right? And there is a US recession, and hence we would not should not look at companies which are US focused and things like that. I'll just give you a small example. of how you should, focus on. You should definitely look at the broad, you can say, macro trends. For example, energy transition is a broad macro trend that we believe in, that the coming decade would have substantial. In fact, if you look at, we've been, early investors in a lot of these companies which were helping this transition, or the whole energy, you can say, capex space, where be a Par or a Borosil Renewable or a Triveni Turbine. A lot of these companies where, we in a way, had a positive view, because what we were seeing in terms of the numbers that were happening in their export orders, or a Borosil Renewal, how the turnaround had happened in terms of the capacity that they had built up. And that macro mindset, if we didn't have, right, so we would not have so many winners from the same sector, right? So it's not that I'm only a bottom up stock picker. I do have a broad view that there is a large energy transition that the world is going on, and hence on the micro level I want to find companies which are great in this space. So now the macro narrative is that China 1+1 might not work, and US, there is a recession. You should not look at those companies, right? I will give you a small example. There's a company called Vari Renewals, Vari Energies, which has, in a way, is present in both those themes. So it's a China plus one, where it is, making solar modules. It is India's largest solar module manufacturer. It is not listed. It's an unlisted company. There's a listed company of the same group, which is Vari Renewable Technologies, which is into EPC, solar EPC. But we made a private investment in a company called Vari, Energies, which is making solar modules. Now, if you look at the numbers, you will be completely surprised that the order book of this company has moved up from some 7,000 crores to around 40,000 crores in the past, just 1.5 year. The sales of the company, that it was doing some 250, 300 crores. Last month in February, they've done 1,200 crores of sale in a single month. They had last year, they closed at 2,700 crores of sale. This year, they are closing at around 6,800, 900 crores kind of sale. In the coming 2, 3 years, they are projecting around 20,000 crores of sales. Now, can you imagine a company? And 90% of their orders are based out of US. Now, people are talking about US recession, right? 90% of the orders of this company are coming from the US. The US clients are giving 15% advance to this company to execute these orders. So the working capital challenge for this company is not that great. And because, those companies in the US who are giving orders, the clear mandate is that they don't want to give order to the Chinese module manufacturer a lot, because 95% of the orders of the solar equipment were from China, right? So they wanted to diversify, and the small diversification is meaning such a large order book for this guy. And if you look at what Mr. Hitesh Bhai Doshi has been able to achieve in terms of, the scale, it is unheard of. In fact, globally, no Chinese company had scaled up so fast. You're talking about 12 gigawatt, which is he's going to be, be at in the coming months, which is like, almost 4x of what he was just a couple of years ago. So that's the kind of scale that, and he'll eventually is going into a solar cell, and he in a way, the kind of business that he's built, the focus that he has, all his family is into this business, his kids, his brother, the monomaniacal focus that these guys have had. I think something very special is going to happen over here, and people would completely miss out, because when this company came to me, I discussed this with a lot of investors. We got this opportunity. Luckily, Hitesh Bhai Doshi opened a round, secondary, not secondary, but a primary round. But the primary round was led by ValueQuest, and that fundraise had got over. But some of the people with us had requested, and Hitesh Bhai was very kind enough to open a new round where we, got a chance to participate. You won't believe a lot of people, because whatever you're talking about, right? Because at that point of time, people were very much focused. अरे यार, यूएस में रिसेशन आ जाएगा तो क्या होएगा? अरे यार, ये प्रॉब्लम वो प्रॉब्लम, चाइना ओपन अप हो गया, अभी तो चाइनीज मॉड्यूल बिकेंगे ना ज्यादा, इंडिया के मॉड्यूल्स कहाँ बिकेंगे? In that backdrop, this company has almost gone up from, as I told you, just 2,500 crores order book, or maybe to 2,700 crores kind of a sale, to 7,000 crores of sale this year, and the order book has swelled to around 35, 40,000 crores. So you tell me, if I would have feared at that point of time, I would have completely missed it, because I just got a window of 7 days. And you won't believe, in those 7 days, a lot of these entrepreneurs wrote check of 40 crores, 50 crores. And the first time in the history of Indian capital markets, I have seen almost 980 crores of capital being raised for an entrepreneur without any large institution being involved. this is what capitalism in India is going to be in the future, and has all the trend has already started. When in history you heard an entrepreneur raising that huge capital just on, and believe me, Kotak was leading their fund round for an IPO, and Kotak said, "Arey, ye to Russia war ho gaya, abhi to sentiment kharab hai, ye wo this that. Let's not go with an IPO now. Let's delay the process." And Hitesh Bhai was like, "Boss, I need to expand. मेरे पास ऑर्डर बुक है." And this is the power of an entrepreneur these days, that when he had the order book, he went on to, and kudos to ValueQuest. They took this up, and they funded it in matter of few days, and investment from large family offices which wrote checks of 50 100 crores, and 950 crores were there at the bank. And now we are looking at one of the largest solar manufacturer emerging out of India. In fact, outside of China, it is the largest and can become, in fact, one of the best success stories coming out of India. If ValueQuest might have asked these questions and backed out, if Hitesh Bhai would have maybe heard this news about what is happening with US or China plus one and backed out, whatever, whoever feared would have maybe lost this opportunity, and whoever believed, I guess, is on the right side of the table. And you would be on the wrong side of the table when you make these judgments, right? I'm not denying that. For example, for the chemical company that I'm saying, I was on the wrong side of the table, right? But then the multiple, you can say, last year the profit of Wari was 70 crores. This year they're doing 400 crores. Tell me one company which has quadrupled its profits just in a matter of a year. Maybe in the future it'll make whatever 1,000 1,500 crores kind of a profit. I The valuation was just 4,500 crores pre-money. Can you believe that a company which is going to earn almost 1,000 crores in the coming future, the operating profit can be north of 2,000 crores, was available in 2 years out. The operating profit, which is looking at 2,000 crores, was available to me at just 4,500 crores pre-money market cap. That is unbelievable that people at that valuation were not wanting to invest, right? So we looked at, you know if we didn't, what would happen if it didn't go our way, right? Maybe the IPO would have got delayed. Maybe the company got listed in 2027, 28, whatever. I might have lost my opportunity, capital. But then I always believe that the opportunity lost is far higher if I have missed Vari. So over the years, if I looked at a company and I understood its business and I let it pass, is a higher opportunity cost. I've always not been able to live with that. I sleep better if I've done that rather than making a mistake. Mistake is okay. If I commit a mistake, I get a good sleep. अच्छा चलो पता तो चला ये गलती की, चलो बेचो निकलो. ठीक है, I'm far better off. And but behaviorally I am a kind of a person which cannot stand error of omission, right? That I looked at it, I've understood the business, and I completely ignored in terms of making an allocation, or not acting at the right point of time. That is what I don't want to do. So the same narratives are right there right now. I believe it's an absolutely amazing time to be making lump sum investing, because you're getting such great themes. Whatever people are saying about China plus one, don't believe it. I was just in a conference just a couple of days ago. There are smaller companies, 400, 500 crores kind of a market cap, having a gross block of just 100 crores and doing a capex of 150 crores, 200 crores. I mean, they're saying that they have order books in hand, they have their counterparts in the US. Because they didn't have facilities, they didn't give them order. So it will take time for India INC to put up capacities, right? Then only China plus one would work. We don't have capacities, then how China plus one would work? So I believe the current phase in the coming 3 4 years, a lot of capacities would be put up in a lot of sectors. There is a huge trend of diversifying away the supply chain. I'm not saying it's China plus one; it is everything plus one, right? It's a Russia plus one, it's a Europe plus one, it is everything plus one. Wherever you have an opportunity to diversify a supply chain, there the decisions are being made, but it will show up in numbers a bit late, because it is something which would play out once the capacities come. They are being audited by those foreign counterparts, and then the numbers would show up. If you don't believe in that kind of long patient investing, then definitely China will not work for you, or any long term investing strategy will not work for you for sure.
Totally makes sense, Arvind. So, I mean, like, if we talk about broadly your portfolio strategy, so basically, be it from the number of companies you prefer to invest and go about how much allocation you do for each of the companies, and like there
Mm-hmm.
are times when you invest and your investment multiply x number of times, and the allocation
Mm-hmm.
turns out to be a big number. So how you go
Mm-hmm.
about managing those situations, and what would be your sell strategy in normal cases?
So, it has, so there are, I'd say that overall, the way we approach this is that, as I told you, that now we try to scale it up more, right? Start with a small allocation and maybe then scaling it up. Earlier, we used to go almost on a very highly, bet, which I am convinced about, to almost, 20% of the initial, you can say cost position. I'm not saying about market position, but cost position, right? But now we've restricted it to 10, so we don't go beyond 10 on any company in terms of the cost allocation. From market price standpoint, it may go up to whatever 20%, 22% we are comfortable. Then we try to trim it if it goes beyond that. But yes, we do make an exception. We also go to 15% of our portfolios in companies that we are thoroughly convinced, right? And that is where, to the my set of investors, whenever and that is why over the years we've always made a demarcation of two set of investors, right? One is a set of investors which are maybe coming on a small case. Now these are the set of investors where my risk management would be far far different, right? And hence maybe Vikram or Gunjan or you can say Krishna and Ajay in my team, they handle the risk portion because I am a very risky guy, right? If I make all the allocation decision in a small case, then there are large set of investors which in a way don't have that large time frame, right? So there we keep it very well diversified. But when it comes to investing with people, or and most of our clients are actually entrepreneurs, right? So we don't, and we have no one in sales. There is no one who in our company runs sales, right? Most of these people are people whom we would have visited their plant, or understood about their business, and they got comfortable with us and hence have become our clients. And they are comfortable with the style of ours, that we will be taking an entrepreneurial bet. And when we are taking an entrepreneurial bet for them, there is also a normal allocation. For example, if I'm managing a crore of capital for someone, then I'll recommend maybe a Borosel renewal is a 10 lakh position for them, and I made an exception to go up to 15 lakh for a Borosel renewal. But the relationship that we have with a lot of these clients these days is that when we gave send a note, and such, some of these family offices, these also have their own people, or someone from their family who looks at the portfolio very closely. They come back to us and they want to participate larger also, maybe going as high as maybe 20% of their portfolio in a single bet, or allocating a very high lump sum capital in, if there is a QIB opportunity or a allotment which the promoter needs capital to grow his business, right? So, for example, for Borussia Renewal, also we tried a lot because they were growing very fast and they wanted to raise some capital. Eventually, we could not, because then they got very large commitment from one of the good PE funds, and then some of the mutual funds also chipped in. But then we are on the lookout for doing that also. So it is, you can say, for the families that the fund that we are managing, or for myself also, it is in a way very concentrated still. And we trim it or sell it as and when, as I told you, there are these buckets, right, where there are cyclical bets. If I've taken, I tend to sell it from the first whiff of the problem in the industry I face. But if there is an entrepreneur whom I absolutely, his execution skills I enjoy and appreciate, he in a way is in a sector which is far more, you can say, niche, and has a high market share. That is where we tend to maybe sell slowly, or maybe get out after holding out for 3 to 4 years and try to see what happens. And also, we over the years also have understood a lot of these early indicators for a lot of sectors, right? That when the earnings kind of, or the behaviorally, when we hear a lot of the company name in a lot of WhatsApp group, or Twitter talking about it, or a lot of activity around the counter in terms of people reaching for out on our notes. A lot of people reached out for our note on an HLE glass code in 2021. That was a huge, you can say, negative, you can say, flag for us. when people get a lot of interested and a lot of euphoria is around that stock, that is definitely where we try to trim our positions. But yes, we try to scale it down as and when our initial, you can say, if I would have bought the company with an idea that the new plant would be coming up, and that will be stabilized, and the sales in a way from the plant would come and the financials would improve, if that is the time horizon that I had kept, and that has happened and the numbers have come or not come, both ways, right? So I'm doing that and then exiting if the stock has run up far ahead of what it should have, and if even if they've not executed and the stock is down also, we would sell, because then the execution has not happened, so I don't want to get stuck in that company for long. So and that is something which over the years we are still improving. So I'd not say selling is still a very good, you can say, skill that I have. We are always struggling with that. But yes, over the years, we've committed mistakes, and at least we are not committing the same mistakes. There are still some mistakes that I don't know. And there's in fact one person, Mr. Bhavin, who has joined our firm, and he looks at a lot of these peaks that happen in a lot of these companies, right? Typical peaks that happen in industries, the stocks rise at the same time, the volume price action that he tracks, and he has in fact helped us a lot in terms of identifying where we should maybe start trimming our position and eventually get out if there is some technical also problem that is being sounded, alarm that is being sounded by him. So yes, there are a lot of industry technical and a lot of factors of behavioral aspects that we are trying to combine when we are selling. But yes, it has become better, but not as good as we would have liked it.
Great, thanks. So we have Malhar with us. Malhar, you can unmute and ask your question to Arvind. Malhar, you are still on mute. Oh, he got dropped. So Kaushik, you had another question, so you can go now.
Yes, Prince. Arvind, I want to understand, is Arvind going to only invest in manufacturing themes as more and more focus on concentrated portfolio? Is it my understanding right?
So that is what my strength is, and over the years, as I told, that being in Surat and in Gujarat, where a lot of these manufacturing has happened, and the circle of entrepreneur that we had was always these good manufacturers who have scaled. So that is what our circle of competence is, and that is where we are focused, and we believe that that opportunity in a way will always keep on showing in our country for the coming 2 decades, right? So I only have to worry beyond 2 decades, because then maybe if this theme is being explored a lot, then what I do, right? So you're very right. Yes, I am focused more on the manufacturing theme. That is a business that we understand a lot. But yes, we have in a way in the recent past, for example, we've understood a lot of these service providers to the manufacturer. So we are focused on business models which we can, so I'd not say that pure manufacturing, but business models where I can verify the data from some of the value chains, right? Typically, for example, if I have a service business related to any manufacturing, that is also a type of business that I like. For example, in defense space, there are companies out of Hyderabad which use their software expertise and combine the hardware, and most of the service, most of the sales is from the service part, right? And still they are a part of my portfolio, because I understand what is going to happen with the overall equipment, and the service provider can be attached to that equipment, and hence can deliver substantial return. So in the services space also, we love companies which are attached to any manufacturing theme. For example, people who would have, maybe Meet is there also, as a listener. Meet did a Zoom call for his community, I guess just post COVID, maybe in 2021 beginning. And that is where we were, in a way, making our green energy transition kind of a theme. And there we developed a portfolio in that. And the constituents over there were a KPIT, which was not a manufacturing mint, right? But it was a company which was, in a way, delivering, a lot of infrastructure for companies around the world who were wanting to make electric vehicles, right? So that business we liked a lot, and being a middleware provider. It had huge opportunities to connect the OEMs to the software guys, and that way it had a fantastic business, right? So yeah, we do have certain businesses because those businesses generally have a free cash flow. Manufacturing business has a problem where the free cash flows become challenged because you need to completely do capex again and again. So if you want to have a large multi-bagger, sometimes you also need to have companies which are not requiring very huge capital, right? So it's not that I'm completely averse of those kind of companies, but these are companies which should be attached to a theme that I understand, right? I don't understand a normal software kind of a theme where I never be able to understand maybe how a software company who is maybe selling software to a US banks or things like that, his business, because I'm not able to touch and feel the US banking business in India, right? So those kind of businesses which we cannot verify the end business. So we generally don't buy companies because just the financials are going up and we make an assumption, and we've lost a lot of opportunities, right? I'm not saying that that is not rewarding. A lot of people have made a lot of money by investing in those kind of businesses. What I'm saying is it is our handicap where if I'm not able to identify what the end industry is, whom they're servicing, and how that growth is happening, and how that growth is in a way going to result into more business to this company, are those companies that we are generally not able to touch and we don't invest. But yes, where the end industry I can verify the clients and how business is happening over there and how they will give business to the company that I want to invest in, those are the kind of businesses that will typically want primarily manufacturing, yes, but also services sometimes.
Got it.
Got it.
So it
So it means it's a B2B business in manufacturing is what you are investing. A small one more
B2B
follow-up question.
manufacturing, and a small portion would be, so in fact, one of the very important thing that I again learned very early in my life was that when I was doing my CA, and Pidilite that time in 2013 June, I guess, they got a notice from the income tax authority that there is, and I was doing my chartered accountanship that point of time, that they got a notice from them that there might be some evasion of income that they might have done. Now the stock tanked. I guess it was running at some 280, 290 level and tanked up to 220, 230. And because I was just very keen that what can happen in terms of what tax evasion might have happened, and I just figured out the income tax penalties that were there at that point of time. It said that you can have 100 to 300% of tax that you have evaded as a penalty. So for example, if you've evaded 10 crores of tax, then the penalty can go up to 30 crores. So you have to pay maybe 10 crores of tax and 30 crores of more penalty. That means 40 crores you need to pay, right? So that's a huge burden maybe. But then if I discuss with a few of the people who were there in the market for long, and I was just saying that as a chartered accountant, I understand that the liability can be at max this, the financial outgo in one year can be very high, but then does it matter in terms of how the market would take it? They said yes, definitely matters of what market would take it very negatively. But you know what, Pidilite as a brand cannot be destroyed by income tax authorities, right? And that is one feedback that I really that stuck in my mind, that yes, how can Pidilite as a brand be destroyed by an income tax authority, right? It was not that the family was a fraud or something. It had a brand which was one of the most iconic brands in terms of what they did, the family did, right? It, and if there was some discrepancy maybe with the income tax authorities, I could have figured out कि अच्छा ठीक है इतने profit अगर नहीं हुआ तो इतना तो I understood, and even at that point of time, I invested almost 80% of my capital in Pidilite, right? And that is where, in a couple of years, it went up 3x. So that is where I thought that whenever a brand or a substantially good company is available at a discount, it's a great time to invest in. But the problem is that in India, these brands are a crowded trade because we have a very narrow market, right? The P multiples are so crazy that generally the valuation, in a way, doesn't impress me. So yeah, over the years, we still have 15 to 20% portfolio in these good brands that we are comfortable holding and which in a way are available at a reasonable valuation. Given a choice, definitely I want to increase my portfolio over there. But in India, I've figured out that it's very difficult to find these companies at a good valuation. Yes, in the private markets, we've done a couple of deals in a couple of brands, which I think they are scaling up very fast. But then, yeah, that is it. I'm not sure whether I will increase that portion of my portfolio. But yes, if there is something which comes up and is available at a very good valuation, I'll want to.
So, Arvind, just wanted to check how good we are on time. We have a couple of questions. We have few speakers, so we are good on time, right?
I am free.
Free.
I
Oh,
am
great, great.
starting late also, so it's okay.
No issues, no issues. So, Veera, you can quickly unmute and you can go next.
Yes, I am an investor in the mid and small cap portfolio,
Yes, sir.
and I would like to understand from Arvind how good you are looking into this portfolio tracking, and what is your recommendation time period to stay in this portfolio, and what are the returns you are expecting from this portfolio.
So our mid and small cap portfolio, in a way, is around the themes that I was just talking about. Energy transition is one theme that we play in that portfolio. So we have these large 3 or 4 pockets that we are comfortable with, and are holding companies in that basket. Capital goods or the capex theme, which we believe that the whole world, in a way, if it wants to do energy transition, if it wants to have a lot of vehicles which are run from electric vehicles, if it wants to move away and from this fossil fuel economy to and see, there are a lot of things that people, and in the fund management industry, I don't understand that people generally are so biased with their mindset that they don't look at what is happening on ground. So I speak to a lot of good fund managers. They are good friends and I respect them a lot, but I see them being very negative in terms of when I talk about renewable energy to them. They believe this is a fad and this will not work. You look at the solar power cost has gone down to just 2.3 to 2.4 rupees per unit now in India, versus the from the grid, the power that people are buying in various states has gone up to 7-8 rupees. Some states are even increasing it further to 9-10 rupees. Now it is a no brainer for any corporate, if it wants to, see how the efficiency would come in a lot of manufacturing companies, and I'm very excited about that, is that if you go to the solar power, you are going to reduce your power cost to half. And that is something which is, in a way, will require some capex maybe, but then you're sorted for such a long period of time in terms of the cost. And that, in a way, if you have a good market share in your business, you need not pass it on, and can result in higher profits for you, because your smaller counterparts would not be able to afford that scale of plant, and hence they'll not be able to maybe reduce that power cost. So the point is that this is where I think people are underplaying a lot of these themes which are emerging in the longer term. And we definitely are a firm believer of the energy transition, of the capex that is going to happen. As I told you, companies which have 100 crores of gross block in India are making 100 crore, 120, 150 crore kind of capexes. So I believe, just not in India, look at Europe. People had written off Europe last year because of natural gas, this thing. But if you talk to a lot of, so we talk to a lot of agents of a lot of companies, chemicals, or you can say capital goods distributors based out of Europe. They say there is a lot of onshoring of capacities now Europe wants to do because of what has happened with Russia, right? So there's a lot of capex that can happen in Europe. There's a lot of capex that is happening in US. People want in US and Europe. There was a article also just maybe 4 5 weeks ago, where they are trying to move a lot of renewable energy equipments capacities back in their own countries. They don't want to rely on China, right? And they want to maybe rely on other people also. But then it is also a trend that they want to build those capacities over there. So who's going to build all these you can say equipments for them? A lot of, you'd be surprised by the amount of capital goods that India has exported this year and will be maybe exporting in the coming 2 3 years, because we have the steel cost in India has reduced a lot. So I'm not talking about a lot of capital goods which are very complex, because we cannot beat Germany in terms of quality, or a China in terms of cost in a lot of places. But a lot of these capital goods which are having most of the raw material is steel, and are not that complex in terms of manufacturing, India has scaled up very, very nicely over there, right? And hence a lot of companies in that space are doing well, and that are a part of our portfolio. And as I told, one basket is companies which are consumer brands, and we believe consumption in India would increase dramatically, because if manufacturing is doing good, that will have a trickle down effect on the wages of our country. And if wages are good, a lot of our marginal consumers would have a lot of surplus income to spend, which they're completely not able to afford right now, things that they're completely not able to buy right now. So these are three large themes that we have in our portfolio. And apart from that, yes, a lot of you can say B2B manufacturers, or this theme that in a way is in our mind, that we believe our country can become a large manufacturing hub. And anything that is connected to that theme, we are interested, and is a part of the portfolio, or will we'll be shuffling them and adding some new sectors, or new companies which are in that space we like. Yeah, so that is what the portfolio composition is and will be. And typically in that portfolio, we try to have a earnings growth of 20-25%. And that is what we believe. So in the near future also, these companies are there, are participating, are of that nature. Yes, I'd say that.
So, Malhar Manik has some trouble joining as a speaker, but he has passed on his question, so I read it out for you. So basically, he's asking
Mhm.
which sectors you are finding opportunities in, and especially any thoughts on defense and railways.
So yeah, I mean, as I told you that broadly, if you look at the past earnings also, it was a very bad earning quarter for corporate India. But if you look at companies which were in a way in capital goods, or infrastructure, generally have had good numbers, right? So that is one pocket which we believe it has a lot of earning strength that has been shown. Also, there are a lot of order books when we are looking at in defense and railways of a lot of companies is very good. What we are focused in is on companies who are not 100% dependent on defense, maybe a part may be dependent on defense, and a part they are exporting. Maybe they also have a division which in a way they are using their manufacturing skill to manage or make critical equipments, be it for railways, be it for defense, be it for export markets, be it for private you can say enterprises. So those kind of capable companies we like a lot, because if you depend a lot on just one theme, generally in India, we've seen uh, a lot of orders getting delayed, or sometimes payments getting delayed. But this time, definitely the seriousness is a lot better. The payments are also a lot better, but I don't want to 100% predict that cycle. So yes, uh, we're looking at companies to indirectly play that sector, or service provider to these kind of major people who are getting the order book, and maybe also supplying to private enterprise and exporting export capabilities they have in that space. Apart from that, capital goods, as I was referring to, also one theme that if you look at, as I was telling you, that the power costs are going up in a lot of states, right? So if you look at a lot of projects in India last year got delayed because the solar equipment cost had gone up through the roof. Be it solar cell, be it any component in the glass, any component in the value chain, every price of every equipment had gone up by 30-40%. So the execution cost of a solar power project last year had gone up by 20-25%, which this year the solar cell itself has fallen by 40%. Solar glass has fallen by 30-35%. So a lot of these equipment have gone down. So A, what has happened is that your project cost has gone down. So if you were maybe for per megawatt, it had gone up to 4 crores, 4.5 crores, it has gone back to 3.5 crores maybe. And B, your power cost has generally gone up, right? So the savings that you will make in terms of generating that solar power as a corporate has gone up. So I believe that there'll be a lot of execution in the coming 2-3 years. So that is a very interesting space, and how you can play that equipment manufacturer, EPC guys, you have a whole bunch of people through whom you can play that transformers, things like that. So you need to be very watchful of that space, I'd say.
So, Arvind, there are times when team members have different kind of views. So, how you manage that, and like if you have different views, and say some team member put forward different views, so in such cases, how you go about taking a decision?
Oh, that is a, a fantastic question, and Dharam Sankat mein dalo, because the team members are there also attending the space. So, anyways, but the point is that over the years, I have always believed in empowering the team. if you look at the mistakes that I have done in the past, I generally thought that if someone would have given me a very good, you can say, analysis on a point, then I would have maybe managed that position well, or maybe took a right decision at right point of time. Earlier, it were a lot of investor friends. In fact, I still remember a lot of mistakes that I've done. There were some of my friend or some of my colleague in the office that was, alerting me that Arvind, maybe you should think like this, and maybe I avoided that and maybe committed a mistake. So yes, maybe I was not empowering them till 2016, but post 2016 17 I listen a lot to them. In fact, and that has happened because of some large mistakes that I've committed. I still remember I was in Chennai, a company that I held, and the market cap had gone up from some 2-3 thousand crores to around 12-13 thousand crores. And a very very dear friend, and I regard him to be a mentor also, and a great investor, told me that, Arvind, are you comfortable holding this company at these valuations? Right? You just think about, if someone is putting that plant at, if the promoter of the company would be comfortable, putting up at 12,000 crores this enterprise, and be able to maybe generate some positive returns on a 12-13 thousand crores kind of a investment. You think like that, and you see whether you'd be comfortable holding that business or not. And I guess that I ignored that. Was the biggest mistake of my life, because the drawdown that my investors and I saw post that could have been avoided with, if I paid heed to that advice. And yeah, so post that, a lot of things changed. And yes, so now Vikram, Gunjan, those two are my, so we Niveshaay, in fact we are three musketeers. I don't know why I get the only attention. In fact, Vikram and Gunjan have the equal say in the matter, in whatever decision we are making. But yes, internally, I because most of the investors who have come have a longer relationship with me, so the responsibility is mine. So I would not say that this has happened in the enterprise because Gunjan told me this or Vikram told me this. The end responsibility is mine. The end result is a combined effort of us three with the team, of course. Those are the two whom, because they are in touch with the whole team more than I am, because I'm traveling almost 10-12 days in a month. So I rely on their feedback more, because they are in constant touch with the team, and spend more hours with the team. But yes, of all the 12-13 members, everyone contributes, you can say, to the end result. But yes, primary decisions we three are making till now for the allocation.
So, Arvind, if I were to ask, what are the common pitfalls or mistakes we should avoid while scuttlebutt? So, primarily, when you visit the managements or the entrepreneurs, what are the things we shouldn't do?
So there are a lot of things that one should in a way take care, because scuttlebutt is a very difficult, you can say, way of, so if there are 10 ways of making money from the market, I'd say this is very difficult, in fact one of the harder choices to make, because you can always get influenced by the management, right? So it is very difficult for your brain to be so disciplined to take into account each, you can say, meeting, or each kind of interaction with them in the right frame of mind, and not get carried away sometimes, or not pay heed to the negative you also given by the industry, right? So as I am in a way practicing that myself, I'm not saying that that is something very easy to practice, because I have faced similar issues. But what has happened over the years is, the other things that I've tried have worked so bad for me, that this is the best amongst the things that I have in a way approach investing with. So over the years, I've tried to make hacks around the things that as I told you, now I have a bunch of great friends who are in the investment community, and they like, I like to get their view also, right? So I try to message them that this is the company, I'm thinking this has happened, this is the journey of the entrepreneur, this that, and what their feedbacks are. If I'm missing something, I'm not relying on them in terms of telling me whether I should buy or not. I rely on them to basically maybe pick their brain up on some point that I might be missing because of the bias, because I know my mind would be biased, right? So whatever I can do in terms of discussing with these friends, or maybe Gunjan and Vikram, to maybe get certain points that I might be completely ignoring, and they might have, as an independent entity, taken into that account. And if I get that point, so first thing I try to do it, get more you can say opinions on that business. Second is, if you're doing scuttlebutt, you should avoid, you can say, taking a lot of, you can say, easier route of maybe going to smaller or very very small or micro cap companies and trying to do something which is into getting some information which you have a upper hand on, because you never know what information is an upper hand. You never know, very small companies, sometimes the liquidity that they have can ruin your you can say portfolio, because sometimes the information arbitrage over there can believe you that you have some information, and you can basically maybe earn better than the other investors, or maybe this is a once in a lifetime opportunity that you've got, and maybe you can make a big error in terms of extrapolating a lot of things. So try to avoid that, because a lot of things can go wrong in terms of trying to judge or take a very large position based on very small companies or micro cap companies which don't have a sizable position in their own sector, or things like that. So, and I've seen a lot of people approaching scuttlebutt in terms of taking a small database and then being biased towards this, and only taking the positive feedback, right? So see what happens is, so there was a company, in fact I also have made a similar error, where if there is someone who I'm discussing with, the questions that I'm framing are on the positive side, right? So I'm just asking about what growth is happening, right? I'm not asking whether there are some risks that has come up. So sometimes you make the error of judgment in terms of the circle that you're in and the kind of questions that you're asking. Always display your bullishness, right? So if someone has a contrary view, he would not be able to give you, because you're sounding so bullish. The other way would say, yaar isko main bolunga to bhi ye manega nahi, right? So that is one thing that you should surely avoid. You should take you can say a lot of contrary feedback also. And also you should increase a lot of effort. I believe people don't make that kind of an effort when they're doing their investing, and then they want results which are different. So if at all you feel scuttlebutt investing is what works for you, then the type of efforts that you should make should also go up. As I told you, when we were maybe investing in a lot of these companies which we believed were very cheap, and the energy transition theme was playing out, we participated in the Gujarat tender for renewable energy for a lot of entrepreneurs that were manufacturers. And one bid we put from Niveshaay also. And the downside was just 2 lakh rupees, right? That if I didn't wanted to go ahead, so I could maybe the 2 lakh deposit that I gave might have gone away. But the upside for me was that I get to go through the whole process, the bidding process. I go to what kind of rules and regulation the government has, what kind of transmission lines need to be where, in which area in Gujarat they are there, what kind of you can say equipments would be required from the balance of the plant apart from the solar module. If it's a hybrid plant, then how it will happen. So then and that encouraged us to go to other states and take up and understand their policy also. So the kind of hard work that and I'm surprised, sometimes surprised, in fact. I have a guy in my office now which travels almost 18 20 days in a month. In fact, he hardly is in office. In fact, I just have to tell him that this is a company which maybe the product feedback I need, and he'll go to Pune, he'll go to some distributor in Chennai, he'll go to some guy in Delhi and do that. So it is a culture that you create. Somehow that culture in our office attracts people who are very passionate to do that, and that helps us a lot. So if you want to seriously go towards scuttlebutt as a method of investing, they don't take half measures, right? You need to create a culture around that, and you need to have people around, because you alone cannot do a lot of things which can do or collect that kind of ground data for you.
Yeah, rightly explained, Arvind. So, Arvind, like understanding the value chain is very important in investing. So, what would be your suggestion, like how one should go about understanding it? Because there are sectors it is not easy to understand the
Yeah,
value chain, and making decision without that is very difficult, right?
correct. See, understanding the value chain, in fact, is something which only experience can, maybe give you. So it's very difficult that right at the first go, you will be able to understand the value chain of a sector just when you started it, right? So what has happened is that over the years, if you make that approach, that suppose certain theme is growing very fast, you have to, in a way ask that my and we in a way, in our portfolios that we made, try to in fact play a lot of companies which are in the part of the value chain, and not played something which is a very obvious choice, right? So for example, if someone is saying that EV industry is growing very fast, obviously people would say that you invest in this two-wheeler company who is making EV vehicles, or a three-wheeler company which is making EV vehicles. Our approach always is that let us understand this two-wheeler company which is making EV vehicles, what is its value chain. So for example, as I told you in the beginning of the session, that RR Kabil family, so Mr. Sumit Kabra is a good friend, and he launched the EV vehicle under that family, Vigos करके नाम था उसका. So his brother is to handle that. So we in a way, try to visit their factory, look at all the parts that they're assembling, from where each part is coming, what all things they require to make a two-wheeler. And that gave us a lot of insight on how the battery management system works, and that gave a lot of insights on how, and that time, because we were wanting to understand about shivalik bimetal a lot in terms of what role a shunt resistor plays, and how that is being sourced, and what is happening with the BMS system, how many BMS systems are maybe sourced from China, and how many Indians are companies are able to make, and things like that. So the whole value chain, we try to make sure that, for example, FIAM is, they made a tie with FIAM maybe to deliver their LED lights. So a lot of insights you get once you find out an entrepreneur who is ready to share with you his whole value chain. And that is very, very important in terms of, so you need to increase your chances for success, right? Or chances for knowing more. So the whole point is, people don't want to increase their chances, people just want to make negative lists, right? कि मेरे को ये नहीं करने का, ये नहीं करने का, ये नहीं करने का, ये नहीं करने का. So the point is, you close a lot of doors of the possibilities of your investments, right? What has worked for us over the years is that we've always been very open, that इस तरह के धंधे में भी पैसा बन सकता है, बन सकता है, बन सकता है. हम लोग हमेशा ये सोचते हैं कि क्यों नहीं बन सकता है. So if we get a lot of reasons कि हाँ अच्छा ये सारे reasons है इसलिए इस तरह के धंधे में पैसा नहीं बन सकता है, तो ठीक है चलो close the chapter. But we don't come. So this happened because, as I told you, I never had someone who was in investing, right? So हमको पता ही नहीं था कि ये धंधा work कैसे करता है, right? I never read a lot of books on investing. I never had a lot of background of elders or people from the family who were investing in stocks or things like that, right? So I never knew कि investing के pitfalls क्या है, right? कि किस तरह की कंपनी चोर होती है, कि किस तरह की कंपनी चोर नहीं होती है, किस तरह के businesses अच्छे होते नहीं होते. I never had. So we so जैसे if in an AGM Buffett was asked that if you were to give a suggestion, then how should I start my investing, then he told that start with a letter A. Right? So you go to A, you look at the companies in A, and then that is how you start researching about companies, right? So actually for me, I used to, way back, there used to be ET used to give these. So ET में पहले सारे stocks जो listed हैं BSE पे, वो पूरी लिस्ट देता था. वो एंड में 3-4 पेजेस पे वो पूरे A to लेके Z तक सब स्टॉक्स की लिस्ट आती थी. So for me, it was actually going there and looking at companies names to for sometimes just find out ideas कि यार इस नाम की कंपनी का just वेबसाइट विजिट करते हैं, देखते तो है करती क्या है ये, ठीक है. So in a way, because I've done a lot of things, not being from a background of investing, is that the culture always has been that why not try. So that has, in a way, we found a lot of bad businesses by doing that. But what has happened is we also found a lot of good businesses which people were thinking that these are businesses that you should not invest in, because generally the market or the fund management industry behaves in a certain way, or they had a view of a certain way that they thought about a company like a Borosil Renewable, or a company like HLE Glasscoat, or a company like maybe Garvare wardrobes. In fact, in 2014 when we bought, people used to say Vayu Garvare to yaar wo ayash aadmi hai aisa. So people make such bad comments and then don't know about the promoter much. And what Vayu did, post that, and you look at the success story of Garvare wardrobes, it's Garvare Technical Fibers now. So we bought that company when it was just 170 crores of market cap, and it had a dividend yield of 5.5-6%. And we just bought it because I, had a friend who was wanting to go into the marine business, and he was very much interested in terms of that वो aquatic cages और इन सब की उसको थोड़ी सा knowledge थी. So I just asked from him that what all you are doing and how you're sourcing your equipments and things like that. तो ये टोल्ड यार मैं एक कंपनी से मिलने जा रहा हूँ, ये इंडिया से है, ये एक्सपोर्ट भी करती है. मैंने बोला अच्छा इंडिया से है. तो आई जस्ट गॉट अ सो इससे पहले मैंने देखी थी गारवरे टेक्निकल फाइबर, बट मेरे को उसके एक्वाटिक केजेस के बिजनेस के बारे में पता ही नहीं था. मैं एक्साइटेड हुआ था उस स्टॉक का देख के कि मेरे को लगा कि ये स्पोर्ट्स के नेट्स और ये सब का बहुत बड़ा मार्केट होएगा. जबकि वो उसके लिए बहुत बड़ा मार्केट था ही नहीं. So it was just an error that I committed, that I believe that the company's business is coming from something. In fact, the business is not coming from that. But because I didn't have a starting point, I just looked at it and then eventually improved on a lot of things. And now we have certain things that we might be doing good, but those mistakes in a way have improved over the years, and our openness in terms of trying new ideas is still there. So if you look at and this is one feedback that I also got from a very good investor. In fact, he told me that the whole emphasis of a lot of due diligences when it happens with a lot of entrepreneurs when they are raising primary capital, for example, is they hire consultants, and generally the emphasis is that where they can go wrong, right, where the entrepreneur can go wrong. And hence a lot of times these large investors are also not able to invest because the consultant gives them a view कि यार ये तरीके हैं जिससे ये धंधा बंद हो सकता है, so let's avoid it. So he started to not listen to these consultants and then focused on that what are the things that can go right. So होता ये है कि उसमें if you focus on the things that can go right with the kind of business or the entrepreneur, then there are a lot of things that your brain would be able to pick up from the entrepreneur, that his vision, his zeal, his dream about his company, you'll be able to understand in a better manner. And that over the years I think has helped us also a lot, that we never shut our mind. Even if we go to any trade fair of any industry, even a small guy who's making 20-30 crores of his sale in a particular industry, and he is very willing to talk to us enthusiastically about his business, we are very much interested to understand from him कि यार तू कर क्या रहा है, कैसे कर रहा है, what kind of opportunity you have, how you're growing. So yeah, I mean, we do just one thing good at Niveshaay. I would say that we increase our chances of finding companies, and that can come from anywhere, whether listed, unlisted, whether by visiting a trade fair, whether by visiting a plant, whether by attending an AGM, whether a feedback from a good investor, whether a feedback from the pool of entrepreneurs, 40-50 entrepreneurs that I said, we try to visit them almost on a yearly basis to understand their whole supply chain. It can come from anywhere. So we increase our chances to get the primary information, because secondary information, once we get, we make it a smaller portion of our portfolio, not a very high portion of our portfolio. We do make them a portion of our portfolio, even if the company is doing good and I might have maybe missed out investing early into it, but if it is scaling fast. But the high allocation portfolio are companies which we definitely feel we have something that we might have maybe come across, which is unique in terms of what is happening with the company and the sector, and very few people currently are focusing on that.
Interesting viewpoint, Arvind. So there is one quick question in the comments from Radhakant. He's asking how banking and financials hold in the rise of the capital goods sector who needs financing.
So this is the same argument. In fact, I had with a very good friend of mine and an exceptional good, you can say, investor, that he, in fact, did very well last year because he took a very early bet on financials. And I, even though working with ICICI, I didn't get a good hang of financials, and I've always traded them. So I did add ICICI in my portfolio in this run, but then I just liquidated it very soon. So not great returns, but then the point is that his view was that इंडिया में बहुत केपेक्स होएगा तो यार बैंक्स अच्छा करेगी ना. So my argument with him was that if you believe that the capex cycle is going to work, then a company which is directly in that sector and has a high market share, it has huge profit growth that it can achieve in the coming 2-3 years, versus how a financial which can only be a cyclical maybe upturn can have a very different. What different can a bank do apart from funding, right? The capex, right? I mean, the upside is limited, right? It will not that यार आपने वारी को पैसा दिया ग्रो करने के लिए तो वारी बोलेगा अरे यार मेरी इतनी अच्छी ग्रोथ है आप 12% नहीं आप 15% रेट ऑफ इंटरेस्ट ले लो. So I am always, I have that view that why to be in a limited upside business when you can have huge upside if you identified the trend early. So yeah, but if someone is having this feedback that financials में overall consumer finance भी होएगा, capex भी होएगा, working capital के लिए भी पैसा जाएगा, and they are coming out of a bad cycle, so it's a good play. I'm not saying that that's not a good way to approach that. But if someone is having a view that in India a lot of capex would happen, then let me go and buy a bank. This is an attitude of an institution, right? ये mutual funds करते हैं यार. As an investor आपको ये क्यों करना है? आप तो वो पता करो ना कि कौन सी कंपनी है वो capex का beneficiary होने वाली है. As an individual you will make far higher returns. Why do you want to take a lesser risk? That's always my submission, and mera constantly argument. I'm not saying that I have won the argument or he has won. The point is that I see that a lot of these companies who are primary beneficiary of this capital goods cycle, look at how the earnings of an Apar have gone up. Look at how the earnings of an Usha Martin has gone up, and will maybe go up in the future, or an Action Construction Equipment has gone up. Please don't take these as any investment recommendation. And again say that you please consult your financial advisor and make a bet on maybe capital goods or not. But I'm trying to tell you is that you would have far higher return from a specialized manufacturer of a capital goods equipment if you believe that the capex cycle is going to do well, rather than any bank which is funding it, for sure.
अरविंद भाई बैंक्स तो यूएस में भी अच्छा कर रहे हैं. Jokes apart.
See, it is always good that you identify things early. So people who identified banks early, they would have a very good year last year, even though the whole market has not done that great, right? But I and maybe my team is also biased because of my bias, but we have always made a culture that it is the last option that I have, right? If I don't have any ideas, I'm not saying I've not played banks, but we have definitely. But it is the last thing that I do in my allocation if I'm run out of ideas or run short of ideas, for sure.
So, Arvind, like a macro linked question. So, do you think we are decoupled, or we will have a cascading effect if something, I mean, obviously, if something doesn't come to the rescue of banks in the US?
See, again, we are not decoupled. I would say if there is some big blow up that happens, then the world is linked, and we've seen a lot of things happen in the past. So there is no empirical evidence to suggest that we are dealing. But the point is that if you look at what happened in 2008, is vastly different what is happening right now, or even the situation of the Indian capital market. See, 2008, India was dependent on FII money, and a lot of pumping of the FII money had happened before that event, right? So when they took the money, our markets got completely decimated. This time around, our cap markets have been seeing a huge pressure of FII selling, right? Before this event also. So we are not that much overbought from the FII standpoint. We have domestic money which has supported the markets. So even if there is a catastrophe, I don't think that it would be of a repercussion magnitude that we had seen. And this bank problem, and I don't think that humanity is so stupid to commit the same error again in the same magnitude. So अगर वो financial crisis 2008 का हुआ, तो I'm not sure similar huge crisis can happen right now also, because we've learned generally we move forward, right? As though gossip mongers को बड़ा मजा आता है बहुत सारी चीजें बातें करने में ये वो, but I am a firm believer that humans over the years have progressed and will keep on progressing, right? So अगर कोविड का फर्स्ट वेव के बाद जो पैनिक हुआ उसके बाद मार्केट ने कोविड में कोई वेव में इतना पैनिक नहीं किया, राइट? बिकॉज वी मूव फॉरवर्ड, राइट? तो ऐसा markets go down because of something which is vastly unknown. I don't think this crisis of the banks is very much unknown. There is a run on the banks. The situation needs to be definitely very serious and needs to be maybe addressed. But the run on the banks is not on the large banks; they're on the small banks. I'm not saying small banks are not important, but I think the government has that in back of their mind. In 2008, if they put out everything to save the system, I don't think why they will not save, because we need to survive, we need to move forward, right? So 1 in a million chance, if things don't happen, yes, there will be a big crash around the world and we'll be prone to that. But in that big crash, then everything would go down, no? Right? मतलब फिर तो मतलब जैसे वो कोविड में मतलब हम लोग इन्वेस्टर को बोलते थे कि अगर यार दुनिया खत्म होगी तो वैसे भी पैसों का क्या करोगे, और नहीं खत्म हुई तो यार यहाँ से पैसा तो बहुत बनेगा. So the same thing is there, right? Even now that if you have a belief that the whole system would blow up, तो वैसे भी blow up होने वाला है, तो वैसे भी आपके पैसे क्या काम आने वाले हैं, फिर तो वैसे भी मनी की वैल्यू क्या रहने वाली है. और अगर वो नहीं होगा तो फिर चुपचाप वो करो ना कि जहाँ पे आपके पैसे बन सकते हैं. So you're getting good valuation. Good thing is that you're getting good valuation. Good thing is that you are getting companies which, see, you have to focus on companies where the earnings can be growing at a very large pace, ताकि अगर कुछ भी खराब हो तो उनकी earnings फिर भी थोड़ी तो ग्रो हो, बहुत ज्यादा नहीं, थोड़ी तो ग्रो हो, तो यू विल नॉट बी फेसिंग दैट बिग अ प्रॉब्लम, राइट. बट अगर आपकी अर्निंग अपसाइड ही मान लो 10% ही है कंपनी की, और अगर मार्केट में कुछ बहुत बुरा हो गया तो फिर वो द मार्जिन ऑफ सेफ्टी वुड बी वेरी लेस विथ यू, राइट. सो आई गेस इफ यू फोकस ऑन एंड मार्केट में एक्सपेक्टेशन बहुत सही हो गया है अभी, मतलब मैं तो बोलूंगा दैट इन अ वे, यू नो, द पार्टिसिपेशन इन द मार्केट्स एंड expectation setting. Last year, people were very excited. This year, people are not that excited. In fact, most of the people are now WhatsApp forwarding वो IDFC वाला इमेज जहाँ पे आपको 8 साढ़े 8% इंटरेस्ट मिल रहा है या whatever 7% इंटरेस्ट मिल रहा है. तो ठीक है ना, मतलब आई एम नॉट गेटिंग दो रॉकेट्स ऑन माई WhatsApp, तो मेरे को ठीक लगता है, मतलब दैट्स अ गुड टाइम टू इन्वेस्ट एंड कीप ऑन इन्वेस्टिंग. कमिंग 6 months, I guess we should be out of this problem. Even if you're not, there'll be still a bull market happening somewhere. As I told you, Vari, in the beginning, it is still growing at such a fast clip that okay, my growth would slow down, but it will not be like completely out of the window.
Yeah, indeed. And the investor behavior gives you a great sense of where we are in the market. Yeah. So, Kaushik, you have another question, so you can unmute and ask. And then, after one or two questions, we have already taken 2 hours, so we close after that. So, Kaushik, you can
Sure,
unmute and ask.
sure. Arvind, I hope you have time. Sorry,
No, no, I
we are
have
taking a
full
lot of time.
time. In fact, मैं एकदम नवरा हूँ. Please go ahead.
Great. Can you take one story or two stories of your picks in past, where you have started identifying how did you come up with that theme, or like it might be a bottom-up approach or it might be a top-down approach, or you found that company, how did you write it, and make sure that you have a company that you have actually exited also in the same time. So you
Correct.
have entered as well as you exited in the same company, but it should be
Mm-hmm.
something like one is that learning that you have got it in a upside potential, another one where you have lost your capital, but the
Correct.
learning
So
what you got it in this.
yeah, so I've maybe told some names where there were positive experiences. So first I'll start with something where I didn't have a very positive experience, and then maybe take some more example where things might have also done well. So there have in fact been a lot of companies where the experience would not have been positive, but I'll just share from point to point that what error that I made, or maybe what kind of mistakes that we could have maybe avoided. So there are a lot of companies, like for example, there was a company called Time Technoplast based out of Vapi over here in Gujarat. And that company, when we visited, they were making these composite cylinders, and they were very big manufacturers of these, you can say, drums and chemical containers and things like that. So we understood that business, and we liked it a lot. And the way they were trying to enter into a lot of new products, and that was also something very exciting. So again, there the mistake that I committed was that I also got a lot of carried away by the commentary of the management, and a lot of things that they discussed in a lot of you can say meetings of ours. They kind of painted a picture that लोहा तो म्यूजियम में चले जाएगा, मतलब एवरीथिंग वुड बी प्लास्टिक पाइप्स, और प्लास्टिक की सारी चीजें बना देंगे वो. तो ये मेरे को मतलब आई शुड हैव जज दैट मे बी इन अ बेटर वे, एंड दैट अग्रेसिव, सी अग्रेशन इज गुड, बट देन ओवर एक्साइटमेंट और ओवर enthusiasm is also not good, right? So maybe they were trying to solve a lot of things at the same point, and so we did make a good return on the way up when it was going, but then we had to sell it down, and that was not a very great experience because the opportunity cost that we incurred in terms of holding that stock might have not worked very well for us. again, nothing in terms of what wrong, you can say, feedback we have in terms of the promoters or anything. It's just that we should have done a lot of due diligence in terms of a lot of things that they were talking about, or the expansions that they were talking about, in the debt that the company had. Another, a couple of things that I'd say that in we were so we did a very good analysis on the pipe sector, and there are a lot of companies in that sector, and we looked at APL also, Jindal Saw also, Surya also. Somehow we decided to pick up a Jindal Saw or a Surya, and sold out APL very early maybe. And Jindal, because valuation comfort, aa raha tha, but we didn't focus. The management was always telling us that they will reduce the debt, and there's some receivable that they are going to get, and that will pay down the debt. And we kept on believing, and then that never happened. And so how we started was that whole government's focus on pipes. And we thought that India may, again, you look at DI pipes, you look at ERW pipes, you look at LSAW pipes. We have a very good, you can say, steel capacity in India, and hence that's a raw material which has a lot of capacities are coming up, and hence there's a raw material will be sorted, and the government's infrastructure thrust would give a lot of opportunity in terms of the end business also. So yeah, that business we loved a lot, but then we played wrong bets over there, I'll say. So yes, there are a lot of mistakes there where we identified maybe either attending an AGM of a Jindal Saw and then linking it to how you can scale their business, and the identification was okay, the theme was okay, but maybe the stock that we picked was wrong. Also, Surya Roshni, where we loved the way the AGM was being conducted by Mr. Raju Bista, and the improvements that he was talking about, the demerger that he will do of the lighting business, and the improvements that they can do in their plant that was there in Delhi, because that was a inefficient plant and had a lot of you can say that it was the oldest plant, right? And the real estate value of that plant was a lot. And every AGM we used to listen from them that they will be focusing more on Hindupur, and their capacity over there they will want to maybe shift, and the efficiency, because moving products around the factory at that involved a lot of cost itself, right? So we thought that there are a lot of improvements that they can bring in that business, right? And yes, so that again, the demerger didn't happen, and the improvements never came. uh, the plant was never sold or not moved to other place. So yeah, those kind of you can say we didn't make much return, and in the stocks, in fact, we might have sold at a loss also. On the positive side, when I shared that how Borosil Renewables we identified, right? Again, there's another company that I had a positive experience. In fact, there's something which how you pick ideas, right? So that was your main question, and that is where I'd say that actually Glasscoat it was a company where there are a couple of things which in fact gave the starting point, because I had a client based out of Anand, which was into manufacturing of chemicals, and he gave me a feedback that there is a waiting period that has increased in terms of the equipment that they are doing the capex for, which is the glass line equipments, and all these things. So I just asked him that what had happened. That you said that a lot of my peers are increasing their factories, the land prices are going up, and the equipment orders are going up, and it's very busy for all of them, because everyone is busy managing funding for that. And the only issue was whether the plant would come on time or not, because of the situation with the this guy who was supplying these equipments. So we were attending the AGM. So we had a position in GMM Fodler way back in 2015, but then we sold it very early, and we used to keep a tab on the industry. And Swiss Glasscoat was the player which was the second best in the industry. So we used to visit the AGMs, and those AGMs we used to just ask the management that why you're not growing, because their market share was constant at 25%, and GM was growing very fast, but we never used to get a very strong you can say feedback or an idea. But I met someone in Atul who was, the plant manager, who had done all the capex for Atul, and he gave us a very strong feedback of the Amin family, that there is a wonderful family, and and in fact, Atul was the first company which gave orders to Mr. Sudarshan Amin first time when, in fact, he started out, and he encouraged him to, scale up his business, because GMM at that point of time was the only company that people used to rely on, and they used to charge very high, you can say, equipment costs and things like that. So the whole from base to scratch, the company's order book grew because of Atul orders, and then they scaled up. And what feedback I got from Atul was that the service time of, you can say, HLE the Swiss Glass Code then was far better than GMM, and they were very much focused with what the client orders that they've got, to service them well and to keep the relationship. It was just that, because both the daughters of Mr. Sudarshan Amin had, planned to not come to India. They were they had studied in US, is why he's not much focused in growing that business, right? So we gave up on the idea of owning the stock and things like that. But then one fine day in 2016, I remember I attended the AGM, not 16, sorry, 17. I attended the AGM, and the AGM was conducted by one of my friend from Surat, Mr. Alap Patel. So Alap I knew because Alap, was my cousin's best friend. In fact, since childhood they were friends, and all my cousin's functions and his marriage and everywhere he used best buddy. So he was there every time, and I had also developed a good relationship with him, just a friendship, but not a very great friendship. But I knew him, so I see him conducting the AGM, and I'm surprised and shocked, because before that I have not tracked the event that the company has been sold to the Patel family, right? So I'm clicking his photographs and sending to my cousin. Alap is clicking my photographs and sending, my photographs to him, that, my name in my, family is Arun. So he was saying, "Yeah, Arun, yahan pe kya kar raha hai?" So, that is how it started. And I came to know that Alap has bought this business. And I knew that the family that Alap came from, the Patel family, their great grandfather was, one who had a lot of patents in his name, and the family, in fact, this to this date, has a lot of patents of how their flush in their, bathroom should work, or they were first importers of some pharma product. I don't remember, but yes, they came from a engineering and a family's background, where a lot of thing that they've achieved was working on ground on their shop floor, making, molds or things like that, which were unique to their setup. So the business that Alap ran, and I came to know that it's a private limited business, which was actually engineering, which was not listed, it was a private company, was into dryers and filters. And dryers and filters was a product where they had 52%, 53% market share, right? So almost leader. There was no one else close to them, right? So that is where I got very much interested, that this family has huge position in terms of convincing their clients, which were on the dryer and filter side, to buy the glass line equipment. Because any chemical guy, if he puts up a capex, he requires a dryer, filter, glass line, everything, right? So there was a very good cross selling opportunity, because now this family has bought the business. And another feedback that I got when I visited the HLE plant was that the shop floor guys told us that before Alap joined, if they are able to execute some 10 equipments, now they are able to execute 15, 17 equipments, because the changes that he did in the shop floor. In fact, a lot of molds Alap had built himself, which were patented to HLE's credit. So I thought Alap could bring the same changes, because when the family bought the business, they sent Alap to manage, Swiss Glass Code, right? And Alap, if you look at the financial and the margins of GMM and and Swiss Glass Code, there was a huge improvement upside to be made, and I thought Alaf would at least be able to do better things with this company, and that was what the starting point was. Of course, over the years, what ensued was that a 150 crore market cap company, when we started look at it and bought it, they'd announced a reverse merger of their actually engineering, which was completely out of surprise to us, because they merged it at a valuation which was also very good for the minority shareholder, and the market cap didn't budge. In fact, it just went from 150 crores to just 200 crores or 210 crores or something. And Vikram from my team, he did such a good, you can say, merging of the numbers of the private company and everything. And we were sitting with the numbers and looking and not believing our luck that we could get this company at such a low valuation. But the market was completely ignoring it. And rightly so, because they were not sure that what this Patel family is doing, whether they did this merger to, some ulterior motive of that, or whether they will dilute a lot of minority interests and things like that. But Vikram downloaded from the MCA all the results that he could from HLEs, and looked at how they had scaled up that business and what margin improvement was there. And we kind of merged both the numbers and then looked at it and thought that it was one of the cheapest, you can say, maybe special situation that we could get. And that was a very rewarding experience. And in fact, we were surprised that when the market cap went up to 11 to 1200 crores, I one day got a call from Malabar funds. One of the guy team guy from Sumit's team reached out to us, and he told that we found a note of yours on HLE, because there was only one note that was there, and we had a portfolio, in fact a Three Musketeers portfolio that we had put on our blog, that if you can maybe reach out to Alap, because they were trying to reach out and Alap was not coming on call. So I just checked with Alap that why you're not coming on call, and he said, yeah, there is some fund who's trying to reach out. I don't know who these guys are. I said, Alap, they are Malabar funds. You do need to come on a call. Please let me arrange a call with you, because these are big guys. Just understand what they are saying and then take a call. And I still remember it was a COVID lockdown, and I guess it was August or something, and they came on a call. I don't remember exactly, July or August, and the call went up for 4.5 hours. And my understanding of actually, in fact, increased dramatically that day, because the way Malabar had prepared all the questionnaire and the due diligence that they did was far, far higher than we could do, even though we were early in that stock, right? And you won't believe that at around 13 to 1400 crores market cap, they gave 100 crores to the company. Now, Alap's family had bought Swiss Glasscoat at 96 crore. The plant that they bought was at 96 crores. And here they are in a 3 years time horizon. They are getting 100 crores by just diluting 7% of their equity. And we being fools jumped up and started selling the stock, that now अलाप की जर्नी जो है बहुत अच्छी हमने देख ली, और मलाबार आ रहा है, मलाबार के नाम से बहुत जन स्टॉक में चढ़ेंगे at roughly 17-1800 crore market. Yeah, we sold out 20-25% of our stock that we had, right? But then everyone knows that the stock went up far higher, and by 4.5-5,000 crores we were completely out. But then the stock even went to 8.5 thousand crores of market cap. So yeah, that is one rewarding journey that I'd say, that we played right from the bottom to a extent where we were in fact also privy to the whole journey of the family, which I've seen first time for the kind of wealth creation that a family had done. uh, and a very deserving family, right? Extremely good people, extremely good executors, deserved that, and made decisions backing that. So that is what is the rewarding process of an entrepreneur is. And if you get such journeys in your life, 3 or 4 are enough to make good capital for you. So yeah, that is where I encourage the team always to be very serious when they find any such kind of opportunity. Extremely focused entrepreneurs, great executors, and want to scale up their business. And something that happened with HLE, which I guess is really fantastic.
So, Arvind, one question is from Vineet Bhatia. He's asking, since you play a lot on capex plays, so what
Yeah.
is your outlook on rising interest rate hampering the capex plans or cash flows of the capex planning companies?
Yeah, so that is another very important determinant, and in fact, a very good question. And we also try to figure that out. And so we are also concerned that the rising interest cost can derail something. But if you look at in India, the capex cost, has in a way, the last year what was happening was that the execution cost and you can say a lot of other costs had gone up a lot in terms of capital goods cost, steel cost, maybe building cost, everything that has gone down this year, and the interest rates have gone up this year. So there is kind of a bit of a arbitrage over there in terms of one cost going up and the other going down. For example, as I told you, so if someone is executing a solar project this year, maybe the capex cost has gone down by 20% because of, you can say, the material cost, the solar panel cost itself going down, right? But yes, you're very right that the interest cost going up can play in the minds of the people. But in India, the differential is still not as huge as US, right? in India, maybe the interest costs have gone up from 6.5%, 7% to whatever 8.5%, 9%, or there's a 2% kind of a move, which on a base of 6.5 is not that big. In the US, there's a bigger problem, right? But if you look at why the interest rates have gone up, is because the world has inflation problem. Why the world has inflation problem? Because maybe the world has less capacities of certain products or services, right? We maybe uh, world is looking at alternative production destinations because they're adjusting the supply chains, maybe, right? World is looking at maybe the logistics bottlenecks that they had seen, and things like that. So if they were to ease, there has to be capex, right? So I don't know how you can come out of the inflation problem by not having a lot of capex. So if you're on one side, you're saying that the world is having inflation problem, so you need to increase the supply of goods and services, and for that, if there is a readjustment happening in supply chains, I'm not saying that the demand of a lot of products in the world has gone up, but there are alternate products demand has gone up, right? So we want a EV, we don't want a your ice engine, right? We need maybe solar power, we don't need thermal power, right? So a lot of these trends, I think, will, so in capex, I believe, even if the interest rates are going up, there will be a lot of transition in a lot of ways. The things that we are doing would change, and hence that capex I'm very gung ho about. That still the interest rates have not hurt that capex a lot, but yes, they can always hurt, and we need to be careful about that.
Right, Arvind. So we have Meet also as the speaker. So Meet, ऐसा कुछ बताओ अरविंद भाई के बारे में जो हमें नहीं पता है और आपको पता है. Meet, you are still on mute. So Arvind, in the meantime, like who are your investing idols? One, the DP itself, but again, and what's your view on cloning? How we can go about cloning, and how ideally cloning should be done?
Yeah, so investing idols, I'd say a lot of people. In fact, the closest circle to me is the Chennai circle. I visit them a lot. In fact, right from Nareshji Kataria to Mr. Rajivji Khanna, Govindji Parekh, Deepak Kapoor, you can say Prajeshji Maru. These are people, and in fact, a lot of them have now become good friends like Sahil Jain, and also I regard a lot. There's an investor called Mr. Dinesh Parekh from North. He was invested in a Ganesha Ecosphere when it was just 50 crores of market cap, or an APL Apollo when it was just a 70, 80 crores market cap, or maybe and he's seen the whole journey. I mean, as an entrepreneur, he has held them, these companies, in a lot of their transactions to go through, right? In fact, who does that, right? So yeah, I mean, a lot of these people are unique in their sense, and they have unique abilities. And in fact, Deepak is the guy that I was talking about, who talked me out of a stock, and I didn't go out, and I suffered one of the biggest blunders of my investing career. But yes, so these are people whom I look up to. They've helped me tremendously, in my journey. I might be, not naming all of them, but there is a very good friend of mine, Mr. Rajiv Rupani. He's from Bombay. Very few people know him, but he's a phenomenal investor himself, and a good friend again. So yeah, but see, I have good investor friends, but so if I say that whom I follow in terms of, you can say, completely being, as a devotee to them, are a lot of good entrepreneurs who over the years, their journey, I've been fascinated with, because as a start of the session, I told, I'm at core wanting to emulate my great grandfather, and want to become a good entrepreneur, right? So those people are someone who are my heroes, and because, see, as an investor, even I'm not doing as good a job as an entrepreneur is doing, right? So I have a great respect for all the investor friends that I have, but the most respect that I have is, yes, for the entrepreneurs who actually are putting their money online, and their family online, and a lot of things online, day in and day out, for definitely for their family, but also for the whole community and country at large. So yes, that is what I'd say. Cloning, I
Cloning,
believe
I
maybe Monish has identified that idea, and way he has used it in his investing career is fantastic. Again, I regard him as one of the persons who has super clarity on things that he does beyond doubt. मतलब आप उनसे कोई भी चीज 5 साल पहले पूछो, अभी पूछो, 5 साल बाद भी पूछोगे, the kind of clarity that he has is immense. So he is an authority on cloning. So I don't think I can add anything on cloning. If someone wants to know anything about cloning, he can go to his videos, and that is something which insight that he shares is fantastic.
Great, great. Many thanks. So, Meet has some trouble coming as a speaker. I don't know. I'm trying to add him and unable to do that. But anyway, we will connect offline and I'll ask him. So, Arvind, it was really, really pleasure to have you today and full on your part sharing your journey and talked about your winners, losers, and mistakes of the past. So,
Thank you so much.
would appreciate Arvind, like if somebody wants to connect you on Niveshaay. So, if you would like to tell people about it, I mean, the thought process you have already explained, but your offerings or on that part, if you want to say something, please go ahead.
So, as I told you, we as a firm are not a firm which a typical, you can say, investor should go to, because we lie in the last bracket of risk, right? So we generally tell, jokingly, I tell to a lot of my investors that जो पैसा आपका एकदम फ्री पड़ा है ना, जो बिल्कुल भी आप अफोर्ड कर सकते हो 100% लूज करना, प्लीज इन्वेस्ट दैट विथ मी. बिकॉज see, it's joking, I'm not saying that I do stupid things or I play a Russian roulette with their money, but it's the point that I don't know. I'm not a typical you can say fund manager that anyone is looking for, who has this model portfolio approach, or has this banking का इतना टका लेने का, इसका इतना information technology ये percentage लेने का. I generally am not able to do that. It is a skill that I don't have, right? So, and that is what the evolved fund management industry has. So I don't know why someone would want to come to me, because that kind of a risk appetite, and it's clear I'm making portfolios that I want to make for my family, and they can be listed, unlisted, whatever. As I told you, we've also been looking at that. So yeah, I mean, my maximum interest is actually people who are entrepreneurs. Most of our people that over the years have been convinced with my strategy are also entrepreneurs, because some energy we share in common, maybe. Right. I'm not sure, people want to be on a roller coaster ride with me. So hence, I'll not be wanting to share a lot of details about, what are all things or offerings we have. But yes, if someone is a good entrepreneur, I'll be happy to maybe get in touch with you, know what you do, how your journey has been, and because that what excites me a lot over the years. We do have a offering where Vikram and Gunjan actually they take care, which is a small case offering, which in a way they may be the better persons whenever they maybe come on a call or whatever, because they manage it completely. But yeah, that is something which I am a part of. But that is something which we all are a part of. But the nuances of that, mostly they know better best.
Yeah, great. So many thanks once again, Arvind, and thanks to your team as well, who has been doing great work. And it is always pleasure listening to you. So before we close, any closing remarks?
Thank you so much. I mean, Prince, first to call me. As I told you, I'm not sure whether I'm a proper you can say a guy to be there with you. I mean, you've done calls with a lot of, in fact, Ayush Mittal. In fact, yes, I forgot. Ayush Mittal is one guy whom I respect a lot, and you've done a session with him. So those kind of people definitely are something that should be there. Should be doing more sessions with them. One of the finest investors, in fact, we have in our country is Ayush. The sheer hard work that he gives into his investing, and the way he thinks about things is actually fantastic. So thank you so much for having me. You had sessions with such good people, so bring more of those people on your channel, it will be better. And thank you so much for patiently listening, everyone. It's 10:30 in the evening, and still I hope I have not bored you a lot, but yes, thank you so much for giving me the opportunity to speak, for sure.
For sure. Thanks, Arvind. We got Meet. Meet, you can speak now. Are you able to unmute Meet? I think there is some glitch on his part. Anyway, thanks for your closing remarks, Arvind. Really insightful, I must say. And when we talk investing, 2 hours is a very small time. We have had spaces for 4 hours also, so definitely look forward to more
Yeah.
sessions in times to come. And thanks to your team for being so kind and energetic and helping the community big time. Thank you so much.
Thank you so much.